Hey everyone, it's Sean from Guaranteed Rate. Wanted to give you guys your May 2022 market update, let you know what we're seeing, what we're hearing. I hope you all have an amazing Memorial Day weekend. I love this time of year. It just means that summer's right around the corner. So rest, recharge, relax with your family, your friends, and your loved ones. So here's what we're seeing. We're hearing a lot of talk around shift in the market, shift in the housing market specifically. As you know, we talk to a lot of amazing real estate agents. We talk to clients. We do business in all 50 states, all around the country. And I will tell you that the market is extremely busy still and extremely hot, still a seller's market, but there's some things that are changing. We want to make sure we give you all the data in terms of what we're seeing and why we think things are changing and what to do if you're a seller, what to do if you're a buyer, and obviously provide you with a lot of market update regarding mortgages as well. So let's roll. So what's happening? I think it's important to understand some of the factors at play. Things like mortgage applications. So mortgage applications are down 16% year over year. Now, there's three things at play, in my opinion. One is the rise in cash buyers. Okay, one out of every four deals in the country is a cash buyer right now. So when you pay cash for a house, you don't typically take out a mortgage, so you don't ever apply for a mortgage. Two, there's less inventory. Inventory is down about 10% year over year. Although it's rising over the last few months, it's still down. So that's why mortgage applications are down. When you don't see inventory, you don't see a house you like, you're less motivated to apply for a mortgage and kick off that pre-approval process or actually apply for a mortgage for closing on a home. And then lastly, interest rates are high, and that's deferred some people as it's changed their budgets. Rates have gone up quite a bit over the course of the year, off their lowest levels ever on record in 2020 and 2021 to almost 2.25% higher. So obviously, with the rates increasing and payments increasing, changes your affordability. Home sales are also down. Okay, so for the first time in a while, we're seeing April new home sales plunged 17 to 20%, depending on some of the revised numbers from the previous month as well, to an annual rate of 591,000 homes, which is way lower than the consensus of 750, and the lowest levels since April 2020. April 2020 was when the whole world kind of shut down. We were on a lockdown, and we saw home sales plunge. So we're back down to those levels where there's less things moving for sure. And year over year, home sales are down 27%. Now that sounds like a massive number, and it is a big number. However, those are comparing it to some massive numbers when home sales were surging last year, as the consumers were gobbling up real estate inventory with record low home prices and the economy booming. So that's what we're seeing from a home sale standpoint. What we're also seeing is less bidding wars. So early signs show that the higher mortgage rates and higher mortgage payments are beginning to definitely to defer potential buyers from entering the market, as competition is also definitely starting to ease slightly. So while inventory is less than it was last year, it's down about 10%. It is up, so it's down 10% year over year. It's starting to increase about 10% over the last few months. When we look back at inventory levels in January and February when they were anemic, you're starting to see more homes for sale. When back then we'd look at a certain town or a certain market and we'd see like a few homes for sale, like one or two, or sometimes they were closed for business and no homes were on the market. Now you're starting to see homes get on the market and stay on the market, which obviously creates less competition and there's more options for people. So as a point of reference, I know I did an update a couple months ago and I talked about how bidding wars were in some markets over 70%, up to 80% in some of the hottest markets in the country. They fell 2 months in a row in terms of the amount of bidding wars, down to 61%. Now, again, that's still a huge number. And any other year, we're talking about record high bidding wars, but it's not as intense as it was 2 months ago. It's not as intense as it was last month. So the number of bidding wars is starting to decrease. As more inventory comes on, as rates go up, that's what you're starting to see. So it's the second time, 2 months in a row, where bidding wars have decreased, which is a good sign for buyers out there. But it's also good for sellers in the sense that they're still seeing multiple offers on property. There's still big time demand. So what's caused the shift? One, the biggest thing in my opinion is Fed policy. The Fed is trying to combat inflation. And they're doing that by changing monetary policy. It's impacting mortgage rates, which impacts consumers and home buyers. It impacts all sorts of other interest rates on car loans and student loans and credit cards. And what's happened is it's also really big time impacted the financial markets. The stock markets are down in a lot of cases, big time, and other markets are down, which creates a loss of confidence amongst the consumer and a potential home buyer. So, year to date, the Dow is down 13%. The S&P 500 is down 18%. Tech stocks have been completely crushed, and they're on their way back down to numbers that we saw prior to the pandemic, but the Nasdaq's down 28%, and crypto markets have also been, slaughtered. They're down 35 to 45%. That's not as big of a concern to me because only like, I think I saw a number like 10 to 15% of U.S. home buyers or potential home buyers are actually even in the crypto market. So it's not as widespread as like a stock market shift. So that's one thing, market volatility. Two, higher rates. Interest rates are about 5.3-ish on an average 30-year fixed rate with no points. Now, obviously, there's conventional loans, jumbo loans, FHA, VA, all sorts of different options. So just giving you the idea of what a Fannie Mae, Freddie Mac conventional mortgage rate is right now. But that's almost up 2.25% since the beginning of the year. Okay, so that's a big shift in a very fast amount of time. And that's really kind of grabbed potential buyers' attention. So obviously with these increased rates, buyers have lost buying power. Okay, this combined with rising home prices, which we've seen massive appreciation over the course of last year, last 2 years especially, and even just this year, that really impacts people's buying power. So, and then on top of that, psychologically, people keep hearing the Fed's raising rates, and they think that immediately impacts what rates are going to be in the future in terms of mortgage rates, and that's not necessarily the case. But due to raised rates, interest rates on mortgages, the average mortgage payment for a client of ours has increased when comparing it to the beginning of the year about $850 a month, right? So that's over $10,000 a year in interest payments, just based on mortgage rates going on. So it totally has an impact. Your average home buyer or potential home buyer has lost about $160,000 in buying power when you compare it back to the lows of November 2021, October 2021. So certainly what somebody can afford and what they can take on from a housing standpoint has drastically been altered with the Fed policy and interest rates going up. It just shows how big of a factor interest rates play in this whole thing. And then lastly, home price appreciation. The median home price in our country is now $450,000, which is up 20% year over year. And then home prices have gone up anywhere from, depending on the market, 30 to 40% since 2019, right? So that can be intimidating for some people. So those are reasons that the market is shifting. Okay, still super hot. Certainly not like cold and not like collapsing, but shifting. Now, what we're also seeing is some buyers are taking themselves out of the market. I saw a really interesting Zillow report that said about 60% of recent home buyers had taken a break from their home search. They're just trying to figure out what's going on with the markets, what's going on with rates, what's going on with home prices. So they're just pulling back a little bit. Okay. Now, I wanted to give you the reasons why I think there's some uncertainty. There's lots of talk of a recession. I did a really important video a couple weeks ago, and we talked about how a recession does not equal a housing crisis. Definitely check that out. There's lots of talk of inflation, and inflation's real. It does impact your wallets. The cost of goods and services has gone way up. Everything's more expensive than it was last year, the year before, pretty much ever in our lifetimes, in my opinion. There's obviously a terrible situation and war overseas with the whole Ukraine and Russia situation. There's supply chain issues. Okay, waived contingencies, like, in order to get your offer accepted, you have to take so much risk in terms of waiving appraisals, waiving inspections, waiving mortgage contingencies, waiving everything, right? And then competing against cash buyers, right? So it can be an intimidating process. So that's why you're seeing some uncertainty. But at the flip side, I want to tell you why it's still hot, okay? So buyer demand still remains super strong. There's a lot of people that got boxed out of the market over the course of the last couple of years. They still need to buy a housing. Demographics are certainly there. There's a lot, the population in terms of who needs to buy a house, that millennial population is coming of age into their prime home buying years. They're getting married, they're having kids, they're making more money. Okay, income across our country is up. Income is up 10% year over year, according to the Bureau of Labor Statistics. Unemployment numbers are way down. We're at full employment. If anything, there's a labor shortage, which means workers are paying people more, and so that's definitely helping combat rising rates and rising home prices. That your average household income has drastically increased over the course of the year. That can replace some of the budget that's been lost with higher rates and higher home prices. And then wealth is up across our country. The amount of wealth that's been created, although the stock markets are down to start the year, it's been up pretty much every single year before that. So there's a lot of confidence when people are looking at their investments, their 401ks, the opportunity that's been created through stocks and IPOs and RSUs and all that kind of stuff. And then on top of that, let's not forget that rent prices are going up just as fast as home prices. And there's not a bigger motivator than when somebody has to renew their lease and their rent price goes up $800 or $900 a month or $500 a month, when they can buy a home and they can pay principal, which is forced savings. They can write off their mortgage interest, which is a tax deduction. They can have equity and appreciation gains. which creates wealth. So there's a lot of information there for you. What to do if you're a seller, okay? Work with an amazing real estate agent that's going to give you great advice, okay? Pricing right is more important than ever, ever, ever. Be realistic and don't be greedy. You can't price to a guaranteed bidding war. You can't price for future appreciation. I think in some markets you certainly can, but in most markets that's changed a little bit. I think pricing your property to go on the market right is super important. Sellers tend to live in the past, and they don't realize when the market shifts, it kind of catches up on them. So I think that's really super, super important to make sure that you understand that some buyers have taken a break, and you want to put that house on the market. Your goal is to hopefully get an offer accepted almost immediately in the first week, sometimes the first weekend or first few days. A lot of times that first offer is the best offer, and then understand that you might have to take an offer with some contingencies. The waived mortgage contingencies. Waived appraisal contingencies, waived inspection contingencies. Some of that stuff's going to come back, and buyers are going to start demanding that they do inspections and appraisals and have time to get their mortgage. So, maybe there's not as many cash offers as the market shifts and the stock market's pulled back. So, if you're a seller, those are all important things to keep in mind. Now, if you're a buyer, I don't necessarily think you should take yourself out of the market. I think this might be the opportunity that you've been waiting for. So be prepared, have your team ready, have your mortgage person ready, have your attorney or title company ready, have an amazing real estate agent that can give you great advice, that can help you negotiate, that can pull data, give you comps, and give you great advice in terms of how to win in this market. Get your pre-commitments and we're doing this really great program called the Power Bid, which will present you to a seller and grab their attention because you're prepared, organized, and you're certain that you're going to get your mortgage. Be able to close quickly. If a seller's put their house on the market, maybe there wasn't a bidding war. Maybe they need that money to buy another place or because they have plans in place already. We can close loans in 10 to 12 days regularly. Okay, speed wins, and it certainly grabs the attention. Know your numbers. I want you to shop with confidence and certainty, and then just have some perspective. Right, rates are certainly up, but also with this shift in the market, maybe you don't have to pay for a future value. Maybe you don't have to pay tens of thousands or hundreds of thousands of dollars more for the house just to win. There's less people that you're competing with. It's normalizing a little bit. So although rates are up, you're certainly going to pay less for the house than you would have a few months ago or last year. So this is the market that you've been waiting for in a lot of ways. So that's what's going on in the market. That's what my interpretation of the shift in the market is. Still super hot market, still a really great market. I'm obviously still bullish about the U.S. housing market. And I think we're going to see home price appreciation into next year. I don't think home prices are going to start depreciating, but we're starting to see more of a healthier housing market. So that's what I got for you guys in May 2022. Happy Memorial Day weekend.